Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, October 30th. Today's comment has to begin with a review of yesterday's close, in which the Dow Jones Industrial Average plunged as much as 425 points in the last 10 minutes of trading before bouncing 100 points in the last 2 minutes. The action was crazy, not to mention stupid. The sell-off reportedly was owed to a Dow Jones report that said General Electric CEO Jeff Immelt indicated he is aiming to keep 2009 profit the same as 2008, even if revenue declines 10 to 15%. Immediately, the market interpreted the Newswire headline as a warning, which led to a sell first, ask questions later response. The silliness of the response was soon exposed after the close when GE clarified Immelt's comment was taken out of context. Fittingly, trading this morning has the major indices reclaiming a good bit of that lost ground. However, it isn't just the GE clarification that is helping things. Rate cuts by other central banks, the Fed's new currency swap line provided to key emerging market economies, better than expected earnings results from ExxonMobil, and a continued drop in LIBOR rates are helping to underpin a bullish bias. This morning's economic data has not derailed the bullish bias either, even though it does not offer much to cheer about in an absolute sense. Third quarter real GDP declined 0.3%. The consensus forecast called for a decline of 0.5%. The contribution from inventories was less than we had forecast and could be revised upward with September data, but economists will focus on the trends in final demand. In this regard, consumer spending stands out. It declined at a 3.1% annual rate, and the contribution to the GDP change was minus 2.25%. This was worse than our forecasts and most others. Net exports was also significantly weaker than we had forecast and could also provide an upward revision in subsequent reports. The BEA has to estimate the September data, which is not yet available, and appears to have made an extremely conservative assumption. Government spending was stronger than expected. Non-residential construction was up a bit as expected, but that will head south in the fourth quarter and into 2009. And business investment in equipment and software was also in line with our forecast. In our opinion, Q3 GDP could well be revised to positive territory with upcoming inventory and trade data, but there is little consolation overall. The weakness in consumer spending will appropriately attract the most attention. Weekly initial claims, meanwhile, were unchanged at 479,000. That was slightly worse than the consensus estimate of 475,000. The steady state of claims, though, has diminished any newfound sense of negativity toward the claims number, so the market has taken the report in stride. The claims data point to a 10th consecutive month of a decline in non-farm payrolls, yet there is some solace in the idea that the trend is not worsening at the already discouraging level. I'm Pat O'Hare for Briefing.com. Thanks for listening.